Inflation is once again rearing its ugly head, but Jay Powell doesn't seem too concerned. Let's talk inflation and elections on the weekly update. Okay, let's talk inflation and elections. Here's what you need to know. Most important thing, the market is being pushed and pulled by inflationary and election year dynamics. Here's what I mean by that. Let's look at oil. Previously, I think it was last week, I started talking about a second inflationary wave occurring. We continue to see data that is what's happening. Here's crude oil, and I've drawn a line at previous resistance around 83.50. And if you look at where we are today, we're at 85.64. So we have what looks to be the beginnings of a breakout here in oil, and it looks like it wants to go higher. Now, that's just oil. Maybe it doesn't matter too much, but where it absolutely will matter, particularly in an election year, is what this increase in the price of a barrel of oil is doing to gas prices. If we look on a year-to-date basis, the price of a gallon of gas has gone from below $3.20 a gallon to $3.63, where we are today, about $3.64. And so this pressure in an election year is going to be extremely important. And unsurprisingly, the stock market sort of sees this. This is 10-year Treasury, so the bond market sees it as well. And what the bond market has been doing is it's been slowly working interest rates higher. And one of the reasons why this is occurring is the market is saying, okay, maybe inflation, the story isn't completely over yet. Maybe we're going to have a secondary inflation wave. And if that happens, interest rates need to go up. And so I'm not surprised that the stock market is having a little bit of indigestion here, because remember, two of the expectations that this year has been built on was, one, that inflation was going to be under control or pretty much over, and two, we were going to get a whole bunch of rate cuts. And it looks like both of those things are getting priced out right now. But one interesting thing is happening. There's someone who isn't worried about this data, and that person is Jay Powell. The Jay Powell of 2024 is almost unrecognizable from the Jay Powell of 2022. Just today, he came out reassuring on rate cuts, saying, hey, maybe this inflation data is just a bump, right? Remember all those press conferences in 2022 where he said, hey, even as good data was coming through, he said, hey, we really don't have too much data that tells us things are going in the right way. We're not restrictive enough. We got to keep the pedal to the metal, all those sorts of things. And then now we've got data that's going the wrong way. He's saying, I'm not too worried about it. Maybe it's just going to be a bump. And he was saying, hey, the recent data does not change the overall picture. And he was sort of pacing rate cuts later this year, even as the market is sort of taking them away. It's a very interesting dynamic. And one of the reasons why I think this new Jay Powell has shown up is because of the election. I think you can start to feel the thumb on the scales of the election. Jay Powell projected rate cuts. The data is starting to confound that viewpoint, but he's sort of sticking to his guns here on rate cuts simply because he's trying to remove himself from the equation in terms of elections. However, I don't think he's going to be able to do this for long. It is widely reported, it is well known, that if gas prices are up anywhere around $4 a gallon as we get towards election day, that typically is pretty bad for the incumbent. This is an article from February of this year talking about this impact of gas prices on Biden's reelection chances. And at that time, they were projecting $3.50 a gallon by election day. We're $3.64 as we speak right now. So Jay Powell can sort of try and attempt to mollify or soothe the market. We'll see how long he can actually do this. And so what does it all mean, inflation and elections? Well, I believe we're seeing a second inflationary wave starting to form. And primarily this is related to commodities like oil, copper, etc. The market sees this too, and so it's starting to pressure interest rates higher. The interesting thing, though, is despite these signals, Jay Powell is trying to pacify the market and still projecting future rate cuts. I'm not saying that this is right or wrong. I'm just saying that it's interesting how different his positioning is here in 2024 than 2022. Wonder what changed. And then finally, and this is what I'm nervous about and what I'm going to be watching closely, election year considerations may eventually force the Fed's hand. What I mean by that is if we start to see runaway gasoline prices, I think the Fed is going to have to completely alter course and once again start hiking rates to get gas prices under control by the time we ride into the election. So very interesting. A lot of dynamic forces are going on. That's the weekly review. I'll see you on Friday for the markets review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.